So when I think about this, if we go pull up the chart for a second here, and we look at what is this, like October, November of last year, it just went parabolic, right? Literally from October to November up until March, we went from about $15,000 all the way up to 64,000. A lot of the same market dynamics seem to be at play. One, we know that there's lots of illiquidity in the market, but two is when you look at that short-term kind of price, is there a thought process as to how to measure the severity of the move? Like, could this just be a 20, 30% move, or is it much more likely to be, kind of hundreds of percent upwards?
Yeah, so I guess I would just think about it, when Bitcoin breaks its former all-time high, it's just kind of it sends a message to the market, it sends a message to the world that this thing isn't dead. And whatever kind of preconceived notion you had about Bitcoin, or it's a Ponzi scheme, or it's worthless, or anything else, you see someone like Jamie Dimon come out and harp on it for years, and all his clients are beating down his door demanding it. He's gonna have to enter the market. And so that's just one example, but that's happening across the world at scale, across industries, whether it's energy, banking, technology. Everybody's interested in it. Tim Cook just casually was like, "Yeah, I think it's good for a diversified portfolio." Stuff like that, where Apple has a couple $100 billion of cash, right? I'm not saying Apple has bought any Bitcoin, but the whole world's essentially short this asset class, and so everyone's looking to get off zero. Not everyone here is in the world is Bitcoin evangelists like ourselves. And so they need to get it, they need to get off zero. They have, basically zero allocation. And so they're the ones that are on the bid when Bitcoin's 67, 68 grand.
You take the short-term and long-term holder cost basis, and you have this ratio. Explain what's happening here.
Yeah. So this is just the same data, but it's just put into a ratio. And so basically what you see, what is the trend? The green highlights our bull markets, but what I'm really highlighting is when that ratio is going down. So when that ratio is going down, that's saying that the short-term holder cost basis is trending against the long-term holder cost basis. So, that short-term holder, it's essentially the realized price is the technical term for it. The average price of all these UTXOs moving on chain. But during that green, the green highlights there, what's happening is that short-term holder cost basis is bidding against the long-term holder cost basis. And that's happening because long-term holders essentially are cornering the market. And so, you can see if you go to the next slide there, we're just entering that kind of like green phase, which is basically a telltale sign of a reflexive bull market.
Got it. And so when we think about cornering the market, one of the things that I think people don't understand about this is this happens in all asset classes, right? So if you think of like the art market is probably the one that people talk about the most, where there's an auction house. The auction house knows that, hey, Joe is an amazing artist. And so he has 25 pieces that are out in the world. I'm going to go buy 22 of them and I'm going to hold them and then go tell everyone in the world that Joe's an amazing artist. There's only 3 pieces of art that are trading kind of liquid in the market. And then over time, since I've cornered that market, what I'm going to do is I'm going to slowly sell into the market as the price goes ahead and increases for his art. So that's an idea of cornering the market, very illiquid market, very kind of inefficient market because it's in art. If we go to the stock market, I always use the example. There was a stock years ago, or maybe not even years ago, maybe 2 years ago, called Tilray. It was a cannabis stock. And literally, it went absolutely parabolic. It was one of the first cannabis stocks to actually trade on the stock market. But the other thing about it was that they only floated a very small percentage of the stock in the market, and the rest was held back by investors and the team. And so naturally, a bunch of people were bidding into the market. There was a little bit available, and the price exploded. The same market dynamics right here in Bitcoin, right? We don't think of it that way because all the Bitcoin's in the market, but essentially the long-term holders are holding everything illiquid. There's a little bit of float out there. Now you have a bunch of demand increasing because price is essentially operating as like a marketing function. It's telling the world, like you said, hey, Bitcoin's going, more demand comes in, and then that's that reflexivity that you're talking about. Is that like a fair way to categorize this?
Yeah, 100%. I mean, basically, like what you have is the 21 million hard cap. I mean, we're not there yet. It's like 18.9 million, but essentially it's this game theoretic, it's this game theory where holders around the world, the hodlers of last resort, are saying, I'm a buyer at any price. I'm just going to acquire this thing because I know, you can't fight just economic reality. And so I'm just gonna hoard this thing at any dollar price and understand that, there's a lot of people around the world doing the same thing. So, with absolute scarcity and with fiat currency, constantly debasing, the supply constantly increasing, we know where this is going long term. And so that's what you see over time, through the 80% boom and bust, through these parabolic cycles. essentially Bitcoin's monetizing.
All right, so we've got this slide 4, Bitcoin vertical institutional accumulation, and I know that you and others that have been looking at on-chain metrics, Willy Woo, Will Clemente, David Puel, etc. You guys are in your bag right now because every time you guys are sending out charts, now it's overlaid with tweets. Like, yep, I called it. Here's the receipt. So walk me through what's going on in this chart.
Yeah, I just link some of these tweets there to, I guess, maybe hindsight is 2020, but if you're just looking at the chart, right? So this is since the middle of the summer. It's just up and to the right. And yes, there are dips. Sometimes the market gets over leveraged, but it's pretty clear what's happening. And yeah, retail is participating, but for the most part, I would say I'm pretty confident this is big money allocating capital. You just kind of see just basically a relentless bid, up and to the right. Any dips that come are pretty short lived, and they just just kind of get the wicks just get eaten right up. And I think that's a telltale sign of institutional capital is just in the market every second of every day, right? You have retail plebs that will, buy $10 a day, $50 a day, $100 a day. Well, I think there's billions of dollars of capital that are buying, that have bots that are buying every single second of the day. It's going to be a lot harder for the next Michael Saylor to come in and acquire 100,000 Bitcoin without really mooning the price here. So I think that's what's occurring, and that's what's been occurring since the summer at around 30K.